Okay, folks, good morning and welcome to let's call it a market wrap from Rome. I am in a cafe, Grand Cafe La Cafeteria Bella Italia in Piazza Napoli and Rome. They have two locations, one in Napoli, one in Rome. They have no problem with me recording here. They're very nice, give me Wi-Fi, etc. So if you're in town, definitely stop by here. Awesome espresso. This is my espresso longo, which means a large espresso. This is my final leg of the journey. I've been on for nearly about 2 weeks. About 2 weeks now. As a matter of fact, today is 2 weeks. And pardon the background noise, it's Piazza or Plaza, but still is some traffic coming through, so no way to fight that. And plus you have a lot of tourists here as well, like me. So let's get to it. Let's talk about the bond market. The bond price is beginning to stabilize here somewhat. We broke support the day before yesterday. Bond price is under pressure. So why does that matter? It matters because the equity market has been on a tear, and the yield, the 10-year yield, is now ripping up and into resistance at about that 3.85 handle. Now, can it go higher? Yes, and I've repeated this in the past, that tech stocks, back when tech peaked out several months ago, they had not cut heads, they had not cut costs, and the four-handle yield was a lot more difficult for them to handle. Now, perhaps it can handle 4.2, 4.3, who knows? That does not hold true for the small cap names and other big NASDAQ names as well, who don't have the borrowing power. So, or I should say, they don't have the business model that allows them to borrow and to still borrow at higher prices on yield and still profit from their business model. There are other companies out there that just print money no matter what they do. So right now, 10-year yield pressing up higher, probably is going up higher, putting pressure on the metal names along with the rising U.S. dollar, more so the U.S. dollar rising than the rising yields. But if the dollar goes over, we'll be looking to buy back those metal names that we sold, meaning silver, NUGT, etc. But right now it's just not the time. So moving on to the dollar. The dollar, very, very strong. I think we nailed this one several weeks ago, threatening a breakout, and sure enough, we got the breakout, and I don't know what we're up on a percentage basis here, but we're up pretty high. Here's the breakout. We'll go with the closing price, and we're up around 2.75% on the dollar, which is significant. Now, when it comes down to the equity market, the VIX has rallied here. It is sitting with a 19 handle. We were above a 20 handle. NVIDIA came out and announced their earnings and certainly knocked the VIX back. Is it enough? I don't think so, because I did some analysis. And by the way, I did do a recording the other day, and I went to go edit it. And the audio was just simply all static. I don't know what happened to the audio. I double-checked this one twice, once without video of me, once with video of me, and the audio seemed to be working fine. So hopefully this one works out. Anyway, I'll talk more about NVIDIA in a moment once I get to the chart. But NVIDIA certainly spiked the markets yesterday. I have not taken a look at where we are on a PE basis on the overall market. We're going to go to that in a moment because I'm curious. I also want to take a look at the yield curve. I'm curious there as well. Last time I looked, which is the day before yesterday, it was down on the week. As a matter of fact, let's talk about this now. and the yield curve is down. I mean, we're retesting the breakout point here. So if you're wondering why equities are rallying and ignoring that steepening yield curve, it's because right now the yield curve isn't steepening. It's just pulling back and doing a retest of a breakout point. You know, does it break back down? Maybe. We don't know, right? All we do is take a pulse of the market, and we say, okay, if this, then that. If that yield curve pulls back, then in all probability, equity is going to move up higher. Right now, we are at a support level. We'll see whether or not it holds, whether or not it breaks, and we'll trade in that direction. I did put on a trade on NVIDIA. I will post the trade in the members area in a moment, and it is a strangle on NVIDIA, a very wide strangle. So I think you'll like it. So bear with me until we get to that, and we'll talk about the trade in a moment. I have a bit of a cold here, so I apologize if I'm sniffling, and don't edit out the sniffles, all of them anyway. Okay, Dow Jones down yesterday, continues to show a lot of the weakness. Let's take a look at a weekly chart to get a vibe for how we're poised to close out the week. And not very good. I mean, down nearly 2% on the week. To me, this looks like a rounding top. But you know what? We saw that on the NASDAQ a few days ago. What did it do? It rallied. You saw it back here as well in the Dow Jones. Looked like it was going. What did they do? They spiked it. So right now, I'm not ready to say this market's ready to go down or not. I think the NASDAQ's going to carry it for a little while until it doesn't. What I want to do right now is I want to take a look at the PE ratio on the S&P 500 to get a vibe of where we're at on a price point. Okay, so the trailing PE ratio on the S&P 500 is 29.10. If anything, that's dropped down a tick or so since the last time I recorded. And I think one of the reasons why the S&Ps and the Dow Jones are beginning to stall out here is if you take a look at the Fed's balance sheet, we are continuing to see a drop-off on the Fed's balance sheet. So that's allowing for a different type of pressure on money, expense-wise. So I think we're back to that situation where you have only a few stocks in the queues that are bringing this market up higher. So that's a problem longer term. You know, it's all about AI right now. I was talking to my son about this last night at dinner, and he's like, don't you think that that's the next run in the market? I said, yeah, it can be, but you're going to have the also-rans, meaning that during the dot-com bubble, you had anything with a .com name that wasn't even making money. They just had a name and a website. They had VC money getting thrown at them until, of course, the bubble burst. And then out of the ashes rose the phoenixes of Amazon, Google, all the companies that had really solid business models. They prospered, whereas you had Pets.com, etc. Those names just went belly up. So that's the Fed's balance sheet. That's the PE ratio. Let's get back to the charts. I tell you, I'm sitting here in Rome. Rome's beautiful. It really is a beautiful place. There's a lot of tourists and whatnot, completely different from Naples, where we had family over there. So it was a lot different. It wasn't touristy whatsoever. But Rome is just, I mean, I'm looking at the building right now. I'll show it to you in a minute. And it is about 2,000 years old, and they're still using it. I was at the Pantheon last night, and it's just simply amazing. As a matter of fact, let me see if I can blow this up and show it to you. It's hard to see it from here, per se. You'll see the Roman columns. I'll come back here in a moment. I can see, right there. Right where you see the Roman columns. That's 2,000 years old. It's crazy. Completely bananas. So anyway, back to the show. Let's get rid of this. Okay, good. So, and they still use it. It's crazy. S&Ps. We already went over the PE ratio, and on the day it's up, but our momentum indicators are fading here a bit. volume yesterday was pretty good. So, we're stuck in a trading range. We have been in the trading range for quite some time. And right now, I don't see a short. I don't see a reason to get long, to be honest with you. Moving on to the Qs. I mean, this is where the money's at right now. It's where the action's at. And we had a breakout yesterday. We're at highs not seen since clearly 52-week highs. April of 22. I mean, wow. I mean, all these guys out there with these analog charts of overlaying 2008 relative to where we're at right now, they're wrong right now. It's just not panning out. So I do not think it's time yet to go shorting the Qs. There's probably more upside here. Let's take a look at a 4-hour view. And to be fair, we are extended here. But, and we are seeing a rollover on Stokes. Really, it was NVIDIA that salvaged the day yesterday for the Qs. We're probably going to take a little bit of a rest. NVIDIA salvaged it. And again, it's all about the story. It's all about AI. Again, is it time yet to go buying equity simply because of AI? I don't know. All I can do is harken back to the pump and dump that was 2000, and it's eerily similar to what we're seeing right now. I have little doubt that AI is going to be a big part of our lives. But the question is, what's the world going to look like after AI gets implemented? It's completely different relative to the internet. The internet really didn't threaten jobs per se, except in retail. Where AI threatens jobs is in middle class. I mean, if you're not that the blue collar worker is not middle class. Let me rephrase that. Where it threatens jobs is in corporate America, particularly in corporate America, middle management, the desk worker, the people that are grinding out their jobs each and every day, whether they be a customer service representative, whatever. They're going to get hammered by AI. And so the question that I'm left with is, who is going to buy the products that companies have to sell if AI takes away people's jobs? I mean, that's the question that nobody wants to ask, because the answer is not a bright one. What are we going to talk about? Universal basic income from the government? Give me a break. Last time they tried that, we ended up with 10% inflation. So I don't think so. So right now, anyway, Q's going up higher, and right now maybe take a pause, fill the gap here. Who knows? Moving on to small caps, they're getting hammered, and this goes back to what I was mentioning earlier about the rising yields. Small caps are going to have a much more difficult time with the rising yields than the mega cap names, the banks. The banks are under a lot of pressure, and they have broken support. I believe Blackstone, which we like to trade, was up yesterday, but overall, the banks are under a lot of pressure here. These are the money center banks, the larger banks, and they haven't been the story stocks. But what we really need to pay attention to is the KRE. KRE is on the day down less than a percentage point. So these banks are still under a threat. I don't care what you say. You could talk about how ugly the small caps are, the stalling action on the S&P 500. Oh, when you take a look at the banks, whether it be the money center banks on the XLF, the KRE, the regional banks, these are stocks that are under pressure, and supposedly the money center banks can all be bailed out, right? Or they can't, too big to fail. And no worries there. But the share price is certainly not telling us that. So let's bring up BlackRock really quick. And yeah, BlackRock eked out a gain yesterday, but I believe it closed off of its highs. Slightly, not much. Let's look at the Pimp Mac Daddy, JP Morgan. How did it do yesterday? That eked out a gain. But clearly, not performing all that well here, the banks. Consumer discretionaries under pressure. I still have a position on Chipotle. Believe it or not, Chipotle has a higher correlation to the Qs than it does to the consumer discretionary names. Go figure. much to my chagrin. So while the discretionary names closed down yesterday, CMG, I'm going to go to that chart in a moment, closed up. Moving on. Energy moving lower. I believe oil, initially anyway, caught a bid yesterday. Not really, it didn't. It moved lower. They tried to hold ground on news. I know there was some news out of, I think it was Russia, about production. And again, I've been checked out here for a while now, so fact check me on anything right now in terms of news. But oil is clearly sending us a signal that we have economic problems on the horizon. Demand is not there. And it's being reflected in the energy stocks, so I would avoid those names. Nat gas, no follow through on that rally from last week. I would avoid this right now. Emerging markets behaving very, very well here. I have to say that emerging markets, this is emerging markets ex-China, which we own, has been a performer, not an outperformer, but a performer in that usually when the dollar rises, emerging markets tank. And that's not the case. You're seeing a bid under these names as the US dollar moves up higher. So what that tells me is that when the dollar pulls back, you're probably going to see a breakout on these names. Now, this is ex-China. Let's check out EEM. That includes China, about 30% of the fund. Now, it's not performing as well as the ex-China fund. So if I had to invest in emerging markets, which we do, I would go with the EMXC. EMXC, that is emerging markets ex-China. Now, gold continues to weaken here. We closed out closed a portion of our NUGT position several weeks ago, and we closed out a good portion of our position on silver. So gold looks like it has more lower lows to go. I'd like to see volatility rise on NUGT and then sell some puts as we begin to see the dollar peter out. We're not there yet. I think there's more lower lows to go. GDXJ, same deal here. Not much to talk about. We're going to get a bounce soon, no doubt about it. But I do think that we get lower lows first. Here's NUGT. We're nearing extreme oversold levels as measured by stochastics. They can go lower. So again, wait until we hit support, and then we'll be looking to sell some puts on NUGT. Volatility is not there, meaning the premiums that we would collect on selling puts on NUGT is not there. So we need to wait for a price point at which we'd be willing to sell the puts at a price where, you know what, if they're put to us or assigned to us, well, then we'll be happy to accept those shares. We're not there yet. So a 34 handle, 32 handle, sell some premium, get paid $1, get that price reduced by $1. It's like a Groupon on the price, and I would feel more comfortable. All the damage has been done here. I'll be happy to get in at, say, 34, 33, adjusted for that premium paid. Pharma names, LABU, coming off here a little bit, broke support. I would not touch this right now. You had a failed breakout. I would wait for a recapture of 675. Silver, I've mentioned this, a basket case. We sold this a few weeks ago, half of it anyway, and we are very glad we did. And it is going to be time to step back in here. Again, it's all about the US dollar. When that dollar begins to peter out, then we want to start looking at these names for the next run up. And especially if they talk about pivot at some point in time. I'm not seeing a reason for them to talk about pivot just yet. But when they do, you're going to see the dollar come off, and you're going to see the price of these names, gold, silver, mining stocks, they're going to begin to rip up higher. Now, CMG, which we have a trade on here, we're short of it, and I'm looking for lower lows here. We've seen a nice correction on the week thus far, down a little over 2.25%, one trading day left to go. Ideally, we take out last week's lows that would create, and we close there, that would create a bearish engulfing. We're pretty overbought on Stokes, and on a PE basis, we're very, very expensive on CMG. Moving down to a daily chart. It was an up day yesterday, but I think we're going lower. And the reason is that we faded, and you can see the momentum indicators are on the wrong side of the mountain. This is going up the mountain. This is trailing, doing some hiking at the top of the mountain. Now on the other side of the mountain, we're losing momentum. Ideally, we break this support level here at 2016, and we get down to 1970 here. We have a very, very profitable trade on our hands, and we'll look to close out the trade, raise a ton of capital. This is an earnings trade that went wrong on us, and I'm very, very reluctant to put on earnings trades moving forward. These binary events, sometimes you just cannot get far enough from the closing price action just prior to earnings to stay out of danger. I mean, I was very, very wide. The anticipated market maker move, I went beyond double of what they were expecting, and still it landed us in a bunch of trouble, tying up a ton of capital, not where I want to be. So this one is finally working for us a little bit, coming back down to earth. It's expensive. We can make a profit here. It's just a matter of waiting it out. So more to come on CMG. Now, NVIDIA, by the way, as I'm doing this, this is Acqua Panna Toscana, which is Tuscan water, mineral water. And it's really, really, really good. So, NVIDIA reported earnings, forward-looking AI expectations, blah, 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 moved the shares up higher, very strong results. What's not to like here? We knew this is a powerful stock. No shock. Is it expensive? You bet your dollar, bottom dollar. And in fact, when you take a look at the PE ratio as of the close yesterday, it's about on par with where we were just prior to earnings. I don't know how much more upside we have here on NVIDIA. Now, I did open up a strangle on NVIDIA, so members, I will post that in the members area. You'll get as good a price as I got, if not better. Weekly chart here, we have RSI 85 spot A3 extended. We're trading up and into the third standard deviation Bollinger Band extended. Which I'll save anybody that's not familiar with what the Bollinger Band's 3D Bollinger Band is. You're not supposed to be there. So we're probably going to get a pullback fairly soon. Last time we were up here was back here in 21. And we had a nasty pullback. So that doesn't mean that we can't move up higher. We can. It's all about the AI now, and that's the story. And the street put up $450, $500 price target, so everybody's going to be looking for that before they let go. And here you can see daily time frame. I think we sold the 500 puts of 490 in that ballpark. I forget what the price was. Members, go check the members area. And we sold the 290, 295 puts, if memory serves me. So extremely wide strangle here on NVIDIA. Cash flow strategy. My friendly little pigeon here. Hey, buddy, I have nothing for you. Sorry. Massive volume. Let's go to the intraday view. You know, crazy overbought. We closed down the last 4-hour bar, but still net powerful day. And I believe on a 15-minute time frame, we're still a bit overbought. That may have come off a little bit. Yeah, it did come off a little bit. We were very overbought, and we have come off some. Hey guys, from Italy, I am going to check out. I will be back in New York on Sunday. I'm recording on Monday. With Monday being a U.S. holiday, I'll probably do a Monday Night Futures Live. So I will see you guys there. And from Rome, take care, guys. See you back in New York.